Three, two, one.
Hey everybody, Colin Plume, CEO of Noble Gold Investments, and coming to you on a, I would say, difficult day with what's happened here in Los Angeles. And first want to give our thoughts and prayers to everyone that's been affected by this. We've had some employees at Noble Gold, other companies that I'm involved with that have been displaced, and basically for the past week, just been talking to, firefighter friends, people that we know that have been affected. And, we're obviously trying to do everything we can to help in any way that we can and try to get them housing. And it's been just a really unbelievable week for someone that grew up here in Los Angeles. The threats of these wildfires have been happening more and more over the last 5 years. But to see the amount of catastrophe and the amount of people that are displaced, I've met with multiple people that have lost their homes, and everyone's just shell shocked. So our thoughts and prayers to everyone. And now it's, what do we do? How do we figure it out? And the blame game is obviously happened, and is, Governor Newsom, is he responsible? Was there things that he could have done to protect these citizens? And I think no one's going to know the absolute truth of what could have been done. I've seen. I've watched more news over the last week than I've probably watched in the last year. And I think that one of the things to keep in mind is, fire experts have been predicting this type of catastrophe for many years. There's so much brush. There's, obviously we've had situations with it being very dry here. And so it's, I think could it have been avoided? I think time will tell if they could have found a way around it. I think the blame game of, with the firefighters and then not having enough water, the fire hydrants, I don't think any fire hydrant could have, when there's, 100 homes on a street, the fire hydrants were not capable of being able to put out those kind of fires. Now, the real question is was there preventative measures that could have been done? And I think that there absolutely was. One thing that I look at is the Getty Villa or the Getty Museum, which is really close to some of the fires there. They would actually privately get rid of a lot of the brush near their properties. And they would do that annually. And that's one of the things a lot of the fire experts have talked about, is that we should have been proactively burning and getting rid of a lot of this brush when there's not high winds. And they do this in different areas. So I definitely think there were some preventative measures that could have been in place, and these things will come out in investigations and but I mean, we're looking at, they came out today on the news, they think there's potentially $200 billion in loss, which I don't know how we're going to be able to cover that in the state of California, already a state that's in tremendous debt. 10,000 structures plus, 25 lives lost, thousands of homes. And so it's real. Now it's, what are these people going to do? Where are they going to live? Are people going to stay in Los Angeles? Are they going to move out? There's been this exodus of California. So yeah, there's a lot to digest, but let's go to, there's an interesting clip with President-elect Trump talking on Fox News about some of the things that have happened. So
your criticism of Governor Gavin Newsom, are you willing to work with him, and do you believe that federal aid should be provided to California for as long as it takes?
Well, it's very sad, because I've been trying to get Gavin Newsom to allow water to come. You'd have tremendous water up there. They send it out to the Pacific because they're trying to protect a tiny little fish, which is in other areas, by the way, called the smelt. and for the sake of a smelt, they have no water. They had no water in the fire hydrants today in Los Angeles. It was a terrible thing. And we're going to get that done. It's going to finally be done. I got it done from the federal side, and he didn't want to sign it, but it's not going to happen again like that. There's no reason. Can you imagine? You have farmers that don't have any water in California. They have plenty of water. They don't have a drought. They send it out to the Pacific, and it's crazy. So what's happening in California is a true tragedy.
Yeah, and also there was multiple fire prevention bills that got rejected by Gavin Newsom, AB 2330, AB 1951. So you have all these bills that would have put funds towards prevention that were not passed. But yeah, I mean, the situation now is being someone here and talking to people is, you have thousands of people displaced, families, where are they going to live? And this is the problem at hand that we're going to have. And just looking at fundamentally, the homeowners insurance crisis that we have here in California was already an issue. Homeowners insurance, I mean, everybody knows that State Farm moved out of the state, and they're canceling tremendous amounts of policies. And I've seen people say that State Farm is a bad actor in this situation. But what people don't realize is that companies that are insured in California, if they're an admitted company in California, so they're admitted in the state, they actually have to go to the Department of Insurance and say, hey, we have to increase rates, which is exactly what State Farm did. They went and said, hey, the cost of we can't sustain. There's too many losses already. This is before the fire. And the Department of Insurance said, no, you cannot raise rates, because the Department of Insurance, obviously part of their goal is to make sure that there's no fraud, and also make sure that what they try to do is make it affordable. But also, as a business, State Farm said that we had to increase rates. Obviously, this just happened, and it's tragic that they did this for those people that had insurance with them. But State Farm did realize that the amount of money that they were charging was not going to cover. And so I think big picture, what people don't realize is that the Department of Insurance in this state has tried to put dramatic measures to insurance companies, and insurance companies are saying, well, if that's what has to happen, we're just going to pull out of the state. And once you pull out of the state, then your only option in these areas, which is called the California Fair Plan, which is very basic insurance. California Fair Plan is, it will only go up to $3 million in terms of coverage. And a lot of the additional coverages, like loss of use and a lot of other things that are typically included in a policy, are not included in those policies. So a lot of people ended up going to California Fair Plan. So a lot of these people that were canceled by State Farm were under California Fair Plan. So unless they got additional insurance on top, which a lot of people didn't, a lot of people have homes that are going to go well above construction costs of $3 million, and they're not going to have, there's going to be a lot of underinsured people. There's also going to be a lot of people that don't have coverage to live somewhere else, because typically an insurance policy would cover you to live until your house gets rebuilt. But these Fair Plan is a very basic coverage. So we're going to find that a lot of people are typically underinsured. Also, one of the things that I've been thinking about is just the amount of wealth in the home that people have lost. You look at people that have had artwork, or they had, people talk about that they have value in their purses and some of their and their jewelry. Well, a lot of that artwork, unless they had separate insurance, it's all up in smoke, purses, jewelry. So people had wealth that they thought was something that they would be able to sell or use later on in life, if they ever needed it. And all of those things are gone. Now, some of the policies will have some coverage. What about cash? People typically have $500 or $1,000 in cash, just an emergency. All of that money is gone. So not just the home loss, but the amount of money people are going to have to shell out to live potentially if they don't have coverage. There's so many more layers to this than just the home. unfortunately. And, I think, unfortunately, a lot of people are probably going to end up just walking away from their plots of land because it's just going to take too long and it's going to be too expensive. So people that, have built these incredible homes in Altadena and all of these places, a lot of them probably won't rebuild, which is sad. Which is a sad state. So, I think there's just a lot of lessons to be learned. Hopefully, the state will learn some lessons. These wildfires I think there's, and you could see it, there's a lot of people talking about preventative measures online that we did none of them. And we need to be more proactive. But for day to day, for these people, for most of them, this house could be their biggest investment. And all the underlying things that have happened to them have really hurt them financially. I spoke to a family that in Altadena that had their house paid off, and they were like, "This is our retirement. This is something." And now they don't know. This is their big asset that they owned. And so it's a really sad state of affairs. And so I think it's something that we really need to talk about.
So when someone has, say, that $3 million only coverage policy, and they own a $6 million house, how do they make up for that disparity in the?
Yeah. So if they only have $3 million in coverage, they're basically the insurance company. Some have these insurance policies that will go to 125% of replacement cost. So they'll go above the $3 million, but California Fair Play does not. It's basically, that's the limit. If you have the basic policy, so they're going to have to decide if they can rebuild their house for that amount of money, or they're going to have to supplement the difference. And I can tell you this, that the cost to rebuild is going to be exorbitant, because you got to think that construction costs were already on the rise, lumber costs were already on the rise, and now you're going to have so much construction in one area. Just the ability to get the goods necessary to rebuild a house, those costs are going to go up. So I've seen estimates where people are saying that to rebuild a house was going to be like $500 or $600 a foot in a normal world. I've seen estimates where construction people are saying that they could hit $800, $1,000, $1,200 a foot. So, I mean, if you had a, let's say 3,000 or 4,000 square foot house and you have $3 million in coverage, you may not have enough. You may have to supplement. You may have to build a smaller house. That's maybe the state's going to come in and do some kind of funding to help people get there. But yeah, I mean, it's going to be very difficult. And then the next question is going to be, is that what insurance company is going to want to insure those homes again? I mean, what's that cost going to be? I think that's going to be the thing that people understand. I think what the Department of Insurance did is that by them making it so that the private companies couldn't increase the rates, they made home values seem more valuable. Because if you looked at, as a homeowner, some of your costs when you buy, you have your mortgage, you have your property tax, and you have your insurance. And if insurance was going to continue to skyrocket, the natural thing that would happen is that home prices would probably come down. And so what the Department of Insurance has done is they've artificially kept prices high by trying to keep private companies keeping insurance, lower and fighting with them. But now there's no way out of it, right? So we're in a very unique time where construction costs are going to go up, but also the insurance and the cost to maintain a house are going to go up too. So shouldn't prices of homes go down? Shouldn't they be worth less if the cost to live is so much higher? And that's going to be the real question. Are prices in this area going to go down substantially? And I think that is only time will tell. My gut is that the government will make mortgage rates low again, and they'll do that to try to boost up the value of houses. But if interest rates continue to go up or they stay where they're at, in theory, if it normally costs you $5,000 a year to insure your normal home, and it's going to cost you $20,000 or $25,000, your house should be worth less. And so it's been this weird game where they've tried to play with the numbers to make it so that home values continue to go up. But at the end of the day, if insurance costs, everyone has to, if you have a mortgage, you have to have fire insurance on your home. They're going to require it. The mortgage companies are going to require it. So it does create a very difficult predicament in the market. And also, I think, what I always talk about too is that, really understand what things do have value, what are assets. And I've said for a long time that I think the home is just a terrible investment. Maintenance costs have gone up, insurance costs have gone up. It's just not, listen, everybody wants to live in a home and have a place to live, but you shouldn't think of it, this is your saving grace investment. Because there are situations like this that can happen. And at the end of the day, if the cost to maintain a home continue to just skyrocket, it's not a returnable investment unless you are going to live somewhere else. And so I've been saying this for many years that whatever you look at your net worth, you should take out your home because, it's the cost to run your home is so high.
And when it comes to, obviously, that brings up another question is the rebuilding of these homes.
Yeah.
In a state like California, where there is a literal wildfire season, why do you think we continue to build homes out of, mere plywood?
Yeah, I mean, that's the real, the shocking video obviously is of the one home in Malibu with the owner of Waste Management that has the one home that's made out of concrete that survived, and all the homes around are burned. It's something that, we've done. And I think it goes back to the fact that we've had a very strong market for lumber in this country. I think it goes back for, the last 150 years that this industry is sort of dominated. And it also comes back to building. They want to build affordably. And so this is the way that things have been done. Now, I think a lot of people now are going to start to think about how their homes should be built. And I think they're going to have to create some regulation to protect homes in a much better way. And they're going to have to start thinking about how to build homes to protect from fires. But all of those things will just increase the cost. So LA is going to be in a big predicament for a long time. And I think the thing that I feel so terribly about for people is, this unfortunate having to think about this thing that they've built, and they put their blood, sweat, and tears, and having to decide if they're even going to stay, in California, or they're going to go somewhere else. Or, there's people that have had roots here for 30, 40, 50 years, 60 years, and they're going to have to decide if it makes sense for them. And I think a lot of people are going to leave the state. And I wouldn't blame them for doing it. But ultimately, in terms of what you're thinking about investments and as your net worth as an individual, I just don't think it makes sense. You think you really have to exclude your home and understand that it's where you live, it's where you hang your hat, but it's not your great investment to have. So
speaking of investments, I know a lot of people have artwork, expensive artwork in their house, jewelry,
yes.
Purses, shoes,
Yes.
all these kinds of things. If you lose that in a fire or some sort of natural disaster, is there insurance that covers that?
There can be. You can insure almost anything in the world. You can always insure something, but the cost a lot of times is so high. So, a lot of times there's going to be specific limits on every policy for specific items, computers, TVs, everything. So if you didn't have insurance or coverage and you had $100,000 in purses, you're not going to have coverage. There's no way around it. The insurance company is going to say, this isn't reasonable under our policy. When you have diamond rings or jewelry, there's riders that you can get that you have to pay for. They'll have some small amount, but if you had a large amount of jewelry and you didn't have insurance for it, the insurance company is not going to cover it. So there's going to be a lot of money lost in these items that people thought that they could give to their relatives or people down the road that they thought would have value. And that's honestly one of the things that we've, when I actually had to flee my house and I put some of my precious metals in a bag and I left. And yeah, I have a safe and it's fireproof, but I was able to move my metals and go, and I have metals also stored in our private depositories. It's a good idea to have wealth offsite. It's a good idea to have wealth in other assets. And, for people that, clients that have called us that had gold and silver, many of them said, I felt good that I could put, because you could put a lot of gold and silver in a bag and be gone. Having that liquid wealth for a lot of people felt really good. It just made a lot more sense than the paintings or the jewelry and to be honest, paintings, you can make an argument, have gone up depending on the artist, but jewelry typically just loses value. Pretty much when you buy it, there's a tremendous markup, and it's not 24 karat gold. It's usually 14 karat or maybe 18 karat. So it's going to be worth a lot less than when you're getting coins or bars and gold and silver. So having some wealth in physical investments, gold and silver, those are real assets. Those are assets that are going to go up over time. And I think that, people are starting to learn more and more that getting away from some of these, real estate has been one of the worst investments over the last few years. It's just been an absolute terrible investment. With interest rates going up, it's like the market in real estate is absolutely depressed, which really shows that the real estate market is just living off cheap money, cheap debt. And so that's why I think, people have diversified in gold and silver, and it's just a good way to protect yourself. But yeah, you can't rely on that real estate anymore. You can't rely on the banks. I mean, obviously we had that Bank of America catch on fire. And this is another thing too, just kind of going even farther into it. What about people that had cash in their safety deposit boxes? People ask me all the time, should I store in a safety deposit box? There is no insurance for a safety deposit box. There's no coverage. So people that had cash in this bank, it's gone. There's no value. They actually tell you when you sign for a safety deposit box, they tell you not to put cash in there. So for everyone that had cash in this bank in Altadena, that money's gone. There's no coverage, which is scary because I know people that have stocked a lot of cash in safety deposit boxes. So, you have this bank catching on fire. And then, even farther down, as I was just thinking about crypto, a lot of people have been keeping their crypto themselves. They've been keeping it on a ledger. How many ledgers were in these houses? How much value got into these houses? So I think, these are things people are starting to think about, as they're going through this and starting to realize that, you got to think about things differently, and you really have to protect yourself. You want to, gold doesn't corrode. You want to get in assets that really, have intrinsic value, will go up over time, but also you can easily move in the event. Or, we store metals for a lot of clients for this exact situation, that you have some money or some value in a different place. So it's a lot of questions out there, not many answers in my opinion. But ultimately I think that, people are kind of looking at what they had and what they did. And I think that people are going to change their way going forward.
So if houses have always been thought of as kind of a hedge, but you can't include it sort of as your net worth, you're saying, what kind of role does it play in your portfolio? And are there investments that can still act as a hedge?
I think the only thing a home does is it locks in your payment. That's the only thing that I look at when you get that mortgage, and whatever that mortgage is, it just locks that in. So there is some protections there, and those things are good. So you sort of have an idea what things are going to cost. But the problem is, as I was mentioning, is that if your mortgage is $5,000 and your property tax is $1,000 and the normal maintenance on your house is $1,500, but if your insurance costs are going to be, skyrocketing, it really throws the equation off of you limiting your exposure down the road. I mean, I think that investments should be investments, and I think a home should never be an investment. Some people rent their homes and they do it in that way, and they're using it as an investment in that vehicle, but they have a very specific mission of what they're doing. But your primary residence shouldn't be thought of as a good long-term investment because of all the things that we discussed. I think that gold, up 25% last year, central banks continuing to buy gold and hoard gold. And then I ultimately think that silver. I think silver is going to be a tremendous opportunity. Obviously, in my book here, Silver is the New Oil, selfless plug here. I talk about the different types of investors in silver, and I think, there's the early investors and there's the breakout investors. I think right now, if you look at the charts, you can make the argument that you could be an early investor into silver, sitting where it's at today. The metals, commodities markets have been really flat, maybe down a little bit. People have been getting into different investments right now, but I think that it's a good opportunity in silver sitting in the $29 range. It's a good opportunity to look at it. And, for anyone that I'm starting to get some great feedback on the book, friends, family, people that I've been talking to, but I will tell you the book is easy to read. Charts are good. For someone that just wants just an overview of silver, what's happened in the past, what's happening today, and also some tips. I really go through some tips on how I've been able to build wealth and doing it in an unconventional way, because obviously everyone's path to wealth is different. But there's certain fundamental things that all people that have built wealth, that have built great net worth, that have done. The vehicle of how they've done it could be different, but I would say that a lot of them have done it through building assets and really acquiring assets. And I think gold and silver are those assets that you should be acquiring today. It's a new world, new economy. And I give a lot of those tips. I also talk about some real estate tips in here that I think are some sort of secret tips and I give specific cities and areas that I think there's still opportunities in. But I really talk about the opportunity in silver, and I get down all the different specific industrial uses that are out there. So for anyone that hasn't checked out the book, definitely check out Silver is the New Oil. It's on Amazon. Hit number 1 on new releases for commodities. So check out the book. I think it's going to be a good read for everybody.
So before we leave here, is there anything that California can learn from the way Florida's been able to handle their sort of natural disasters and their hurricane season?
Yeah, I mean, I think that we were caught flat-footed. I think that we're looking at I think it's all about preventative. It's really just being preventative. That's the most important thing that we need to do. And also allocating state funds to things that are truly important. I know we've spent a tremendous amount of money on the homeless situation here in California and really have not seen anything gotten any better here. And it's terrible to say this, but because we haven't allocated the money the right way, we have another homeless situation, right? That could have been avoided. So I think that I think we need to allocate funds in a smarter way, and there's so many ripple effects to what we've done by not protecting these homes. I mean, so much of our income comes from tax on these homes. Are people going to be able to afford to pay their tax on their home when they have no home? I mean, my gut is there's going to be a reprieve, which we're going to end up paying for. So I think that there's so many ways that we need to protect our cities and protect the people that do fund the state government, and we need to protect those people. And the state has done a poor job of doing that. And fundamentally, that's the most important thing in any state is people want to be protected and safe. And the state has done a really bad job, and we're going to pay for it. For all of us are going to pay for it. And actually everyone in the country is going to end up paying for it because we're going to go for federal funds too. So it's frustrating. But hopefully we can get some new politicians and some new ideas, and hopefully we can be more preventative. And really it's the most important thing with anything is being preventative and being on top of it. And that's what we need to do today. So Colin Plume, CEO of Noble Gold Investments. Thank you for everyone joining today, and look forward to talking to you guys next week. And if anyone's a Charlie Kirk fan, I'll be on the show on Thursday. Check me out on Charlie Kirk's podcast. I'll be talking about some economic situations, things happening with Trump's tariffs. So anyone a fan of Charlie Kirk, I'll be on the show on Thursday. Thanks so much.